Prime Minister Anthony Albanese says all Australians are in line for a tax cut. Business conditions cool, but it's good news on the inflation front. And Woolworths and Coles bow to pressure and cut the price of red meat. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Wednesday, the 24th of January, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Now, Sean, we've got a really interesting interview coming up after the show today because we talked a lot yesterday about nickel prices. And today you're speaking with Vivek Dar, who is the Director of Mining and Energy Commodities Research at Commonwealth Bank.
Yeah, so we have spoken a bit in recent days about the nickel companies and the lithium companies in Australia and what's happening in those markets. And there's real issues on both the supply and demand side of both nickel and lithium, both those metals. So we talked to Vivek about what's happening, what's going to happen. Are their prices still going to fall? Now, remember, these are battery metals. So these are things used in the electrification of the economy. And to think that I think it's in the case of lithium, the price is off 80% over the past year or so. We ask him why. Is it still going to go that way? What's it mean for some of Australia's big companies? Great chat with Vivek. Very skilled at putting things in fairly simple terms.
Yeah, especially if you kind of heard all the talk about nickel and you've heard all of the kind of the impacts on jobs, et cetera, particularly in Western Australia, and you're wondering kind of what is actually going on. He explains it really, really well. So it's a good listen today. Coming up a little bit later on. The main story, though, this morning, Sean, the Prime Minister, Anthony Albanese, says everyone is in line for a tax cut with a greater focus on low and middle income earners, meaning the Stage 3 tax cuts already legislated are likely to be altered.
Yes, that's exactly what it means. The Prime Minister said the government will take up new ways to provide cost of living assistance to working Australians, and it's expected that changes to the Stage 3 package could be announced in coming days. Albanese stressed that Middle Australia will receive more assistance and hinted that workers in the lowest tax brackets will be included in the changes. Under the current changes, due to kick in on 1 July, the 37% tax bracket will be removed, the 32.5% marginal rate will be reduced to 30%, and the threshold for the 45% tax rate will be increased from $180,000 to $200,000. It means next financial year, around 95% of taxpayers will face a marginal tax rate of 30% or less. But if you think about what I just said then, Michael, and I hope you did think about it, we're talking about changes at the 37%, 32.5% rate. That doesn't help low-income earners necessarily. Canberra watchers reckon that there will be some tweaking at the edges of that package, with some of the cuts wound back from the high-income earners to benefit the low-income earners. Now, the Greens are urging Treasurer Jim Chalmers to scrap the Stage 3 tax cuts totally, use them for other uses, while the opposition is warning the government against making any further changes. Given the tax cuts are already legislated, the government does need the support of the crossbenchers to alter the current arrangements. It's going to be a very interesting couple of days to see what comes out.
And Sean, the other big news out of Canberra yesterday is probably a story that a lot of people have been expecting since about mid-2022. Former Prime Minister Scott Morrison will leave Parliament at the end of February.
Mr Morrison has held his seat of Cook in southern Sydney since 2007. He took the leadership from Malcolm Turnbull in 2018, then defied the odds to win the 2019 election, something he described as a miracle. Many of us agreed with that. He was the first Prime Minister since John Howard to serve a full term in the job. Isn't that quite remarkable? Because you had Rudd, Gillard, Rudd, Abbott. Amazing.
Yep, and Malcolm Turnbull, and then Scott Morrison, and away you go. Like it just shows what a remarkable period of like instability compared to what we had for the century prior.
Yeah, exactly. Mr Morrison will leave to take up global advisory roles on defence and geopolitics focused on the US and Indo-Pacific. The former Prime Minister also wants to spend more time with his family and be more active in his church community.
All right, turning to local markets, how did things go yesterday?
It's a pretty good day. The S&P ASX 200 closed up 0.5% to 7,515 points. Healthcare stocks led the way with CSL, ResMed, Ramsay Healthcare and Cochlear all up around 1%. Fisher & Paykel Healthcare jumped 2%. Financials and consumer staples also did well, Michael, with consumer discretionary companies underperforming. Diversified miner South32 regained some recent losses. Mind you, it's got a lot of losses to regain. It jumped by about 4.5% yesterday. WiseTech Global was up nearly 3%. The gold stocks didn't have a great day. Northern Star fell 2%. Lithium stocks were mixed. Worst of the large caps was 0, down 1.4%. Couple of interesting announcements yesterday. Student recruitment and English language testing company IDP Education. Its share price dropped more than 6% after Canada announced changes to its intake of international students. And Judo Bank's share price jumped 17%. After the newcomer posted a 24% jump in profit for the first half on the back of strong lending growth, better profit margins and minimal write-offs.
And what's happening in international markets?
Well, Wall Street's doing just fine. And yesterday morning, the S&P 500 closed for a second straight day at a new high. Once again, it was the tech stocks that led the way. One trend which has accelerated in recent days is really interesting, and it's the success of Donald Trump-related stocks on the back of Republican adversary Ron DeSantis dropping out of the race to be the Republican nominee. So shares in Digital World Acquisition, that's the firm that's supposed to take Donald Trump's social media platform public, it jumped 55% on Monday night to its highest level in 19 months, according to Reuters. Its share price has now more than doubled over the past 5 trading sessions. Shares in video sharing platform Rumble, which is popular with conservatives, jumped 33% on Monday night. And software developer Phunware, 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 which was hired by Trump's 2020 presidential re-election campaign to build a phone app, it jumped 40%. So some of these stocks are feeling a Trump effect. Away from the US, Japanese equities rose again yesterday, hitting a new 34-year high after the Bank of Japan kept interest rates very low. Chinese stocks also got a boost from reports of a stimulus package in that country. Outside equities, the love affair with Bitcoin is somewhat souring, with the crypto falling below $40,000 a unit for the first time in 7 weeks. Ether, the second largest cryptocurrency, has also dropped. Oil prices are up a bit. Not a lot going on in gold, and the Aussie dollar's buying about 65.8 US cents, Michael.
Sean, I just find that remarkable that there is this kind of sector that is Trump-related stocks, and that they, not just a spike, that's a rocket. Like, that's extraordinary, that impact that he has had following the Ron DeSantis pullout.
Yeah, to double your share price in 5 days because you are the group which is supposed to be looking after the Trump social media platform, it's pretty remarkable, really. I mean, it had a great run, that company, and then when Trump left office, it kind of took a dive. But then it's back again. I like the video sharing platform one, Rumble, because that's not really Trump-related. It's just that it has plenty of conservative videos on it. So all of a sudden, that's doing well. Pretty amazing, Michael.
Yeah, it's just fascinating. We'll be back in a moment with the rest of the day's business news. Sean, business conditions cooled late last year with trading conditions and employment slowing, led by the manufacturing and construction sectors.
The National Australia Bank monthly business survey for December shows conditions remain weak in retail, but pretty good in the services sector. In better news, business confidence rebounded on the back of a recovery in retail confidence, but remains well below the long-run average. Now, the National Australia Bank survey is liked by economists because it shows what's happening in real time. Importantly, the survey shows clear signs that input costs are easing, stuff like labour costs and raw materials. That's a sign that inflation is easing, and that's good news. Overall, the survey results show that economic growth eased considerably late in 2023 after performing better than expected for much of the year. This slowing is beginning to translate in improvement in inflation indicators, and of course, that means interest rates probably won't rise anymore, and at some point they'll start to fall.
Now, I mentioned this one at the top of the show, Sean. Woolworths and Coles have cut red meat prices and defended the amounts that they pay farmers as criticism of the big supermarket chains really intensifies.
Woolworths said it had dropped prices for almost 80 red meat products, including 20% off all lamb. even though it pays farmers according to long-term contract rates. Coles said it's cut lamb and beef prices by more than 20% as well. Meanwhile, the former Australian Competition and Consumer Commission Chair Alan Fells has asked Treasurer Jim Chalmers to launch a formal investigation by the competition watchdog. Professor Fells is undertaking an inquiry which was initiated by the ACTU into the supermarkets. Now, according to Statista, Woolies has about a 37% market share. This is across all grocery items. Coles has 28%. Aldi's at 10%. IGA's at 7%. Given the big two have nearly 2/3 of all dollars spent in Australia on supermarkets, it just shows how concentrated we are in this country. And that's what's really worrying the competition watchdog. It just makes it more difficult to get prices lower on the back of competition.
Sean, the $212 billion future fund, which of course we all hold a stake in, delivered an 8% return last calendar year, adding about $15 billion to Australia's revenue base.
Hey, not bad. The Future Fund benefited from a rally in equity markets in the final quarter of the year. The fund aims to achieve about 4 to 5% above inflation, meaning 8% is just shy of the 2023 target. It compares with the median return of a balanced superannuation fund of 9.6%. Chair of the Future Fund and former Federal Treasurer Peter Costello will step down from job early next month after 14 years in the role. Of course, he's the person who established the Future Fund in the beginning. Over the fourth quarter, the fund increased its exposure to listed equities and reduced its exposure to debt securities and private equity. The portfolio currently has a neutral risk setting.
Australia has identified the alleged cybercriminal behind last year's hack of Medibank and the theft of the data of almost 10 million customers. This was a massive one, wasn't it?
Yeah, it sure was. Russian Alexander Ermakov will be banned from travelling to Australia, and the government has announced financial sanctions that makes it an offence to provide assets to him or deal with his assets. Mr. Ermakov is alleged to be a member of Russian ransomware gang REVIL. That's REVIL. In fact, it's capital R, capital E, VIL, which has been blamed for some of the biggest cyber attacks in the world, including the attack on the Colonial Pipeline in the US and meat processor JBS, which affected operations in Australia, the US and Canada. Now, members of REVIL, or is it REVIL? Maybe it's REVIL, which is probably more appropriate. Members of REVIL were arrested by Russian authorities 2 years ago, though Mr. Ermakov wasn't among those arrested, and he apparently remains at large.
Here's a bit of good news, Sean. Business groups have backed a proposal to increase the number of weeks offered under the paid parental leave scheme.
The federal government introduced legislation last year which would extend the scheme by 2 weeks each year from July 1 to ultimately reach 26 weeks, according to an AAP report. The number of weeks reserved for each parent will increase to 4 weeks in a bid to encourage sharing of care and household responsibilities. Under the legislation, both parents would be able to take 4 weeks off at the same time from 2026. The Australian Industry Group and Australian Chamber of Commerce, which are the key mid and small business peak bodies, say the legislation will help address skills shortages in addition to boosting labour force participation. But they also want a statutory review 3 years after the proposed law comes into effect.
Australia has backed the US and UK militaries in an additional round of strikes against the Iranian-backed Houthis in Yemen.
Yes, in a joint statement with Australia, Britain, Bahrain, Canada and the Netherlands, the US Pentagon detailed the 8 new strikes, which are in response to the rebel group's continued attacks against international and commercial shipping, as well as naval vessels transiting the Red Sea. The statement says the strikes are intended to disrupt and degrade the capabilities that the Houthis use to threaten global trade and the lives of innocent mariners. The group of nations say the strikes aim to de-escalate tensions and restore stability in the Red Sea. Let's hope they're right.
Okay, turning to international news now, and the gap between the value of Wall Street and China's stock market has hit a new high as losses in China continue to pile up and the big tech titans in the US continue to soar.
The market capitalization of Wall Street is now $38 trillion greater than that of Hong Kong and China combined. That's a new record, according to data compiled by Bloomberg. The growing divergence highlights falling global investor sentiment towards the world's number 2 economy alongside the massive support for US tech stocks and optimism that the Federal Reserve will cut interest rates this year and navigate a soft economic landing. Chinese stocks have lost more than $6.3 trillion in market value from a peak in February 2021. Over that same period, US equities have gained some $5.3 trillion. The numbers are massive, hard to get your head around, but still, it just demonstrates how up until a few years ago, China was the great growing economy. Last couple of years, the US has really come back and kind of taken control again.
Now, yesterday, Sean, we talked to Bruce Wolpe from the US Studies Centre, who he knows everything about what is going on in the United States at the moment. And so it's worth going back and having a listen to that interview. But it is a very big 24 hours or so for Republican presidential hopeful Nikki Haley. She is hoping that today's New Hampshire primary will give her a bit of momentum in her battle against frontrunner Donald Trump.
The New York Times reckons New Hampshire amounts to Haley's last and best chance to make inroads into Trump's dominant position. She's the only contender following Florida Governor Ron DeSantis' decision to end his campaign over the weekend. Haley has been more vocal against Trump and also about her policies in recent days, saying she wants to build much more than just a wall. But Michael, my favourite moment was who she got to introduce her at a rally in Exeter, which is in New Hampshire. It was Judge Judy.
No.
Mm-hmm. Judge Judy showed up, and she didn't quite have the gavel and the gowns and that, so a little bit hard to recognise, but you looked hard, it was definitely her. She was there giving her support to Nikki Haley.
Can I just say, Judge Judy is a fascinating person, and the story behind her rise and her dominance of TV in the US is quite spectacular. And I think her show finished in the last couple of years. It's only fairly recently that it finished up, but at the time that she finished, I think Forbes estimated her net worth as something like $480 million.
Wow.
Isn't that quite extraordinary?
I must say, I don't know much about her except that I watch her. I mean, she's an extremely good judicial figure. She comes up with some great decisions over some incredibly petty disputes, I must say. But I didn't realise all that.
Very much off topic, but still relevant to a business podcast. Up next is the Fear and Greed Daily interview. You are speaking with Vivek Dar from the Commonwealth Bank.
All about lithium prices, nickel prices, why they're falling and what's going to happen.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, you know what today is.
It's Wednesday. Yeah, of course.
Indeed.
How do they afford that day?
New episode of How Do They Afford That, which is, of course, our sister podcast that we do with Canna Campbell, financial planner. And today is really how to get ahead financially without buying property, because there is quite an obsession, obviously, in Australia with using property as an investment. But there are a lot of people who perhaps aren't interested in property, or they don't kind of have the savings perhaps to get into it. And there's a lot of different ways to kind of get started in investing and a whole bunch of strategies and things to consider. We go through a few of those. And a mention of last week's episode, I completely forgot to mention it last week, Sean, but it's very relevant considering what we've been talking about. We go through a whole stack of tips and hints on how to deal with the cost of living crisis. And considering we're talking about that most days, it is probably worth going back and having a listen to that one. I'll put a link to the podcast in today's show notes.
I'm a bit disappointed. You said tips and hints. What happened last year? You kept talking about hacks.
Oh,
hacks to address the cost of living crisis. Suddenly we come back and you've gone tips and hints. I didn't even know what a hack was until you started saying hacks.
It made me sound cool.
Yeah.
Don't you think? Whenever I said hacks, it made me sound like I was kind of very Gen Z. I
tell you what, that flannelette makes you very Gen Z.
It's not flannelette. It's quite a formal shirt, but when I wear it kind of open, oh, look, got a loose thread. When I wear it open like this with a white tee underneath it does resemble a flannelette. But thank you for drawing attention to it. I didn't know we were kind of criticising what each other wear.
Well, I've got the normal dull-coloured T-shirt on. You know how it goes.
You've got the uniform, the Fear and Greed uniform. Thank you very much, Sean.
Thanks, Michael.
It's Wednesday, the 24th of January, 2024. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.